Shan. Okay, got the busiest week of earnings next week. 30% of the S&P, 12 Dow components. You got the Fed decision. You got some mega caps on deck. You want to tell me what you think is really at stake here for a rally that's been pretty resilient?
Well, I think if we were sitting here 6 months ago, the only thing we'd be talking about is the Fed, right? We'd be sitting here talking about rates, the narrative, dovish, hawkish, what's the statement going to say, what's the presser going to do. I think we've moved past that in terms of order of importance. No doubt the Fed is certainly important next week, but we don't expect any surprises. We're coming in, we're going to come out of this meeting, we're going to go to Jackson Hole. We might get perhaps a more dovish or nuanced narrative out of then. But I think what you're really looking at is what we've been talking about, this rally in the last 5 weeks or so, and the importance of, number one, the very high expectations if you look at multiple for some of these mega cap tech stocks. And Scott, to your point, the read-through on the consumer. I think we've got Visa next week who can talk to us a little bit about flows. We're going to talk about AXP, obviously. But I think one of the things that I'm taking away from next week is that in the past, we were always talking about tech, and then we were always talking about the Fed. How do these storms come together when we think about what our expectations are for the second half of the year? And can earnings deliver, Scott, based on these outsized multiples? Last thing, 36 times or so for the those top 7, only about 17 times for the rest of the market. So I think the valuations are not quite as demanding for the other companies that are reporting next week. I don't know if it's going to be enough if we get some light reports from those big names.
Jason, can earnings deliver? Right, that's a good question that Shannon raises in the context of whether those stocks specifically are priced for perfection. Yeah, as maybe Netflix and Tesla showed us that they were. Or at least where the bar is, because the multiples have expanded a lot. The stocks have already gone up a lot. That's how Wolf Research today is talking about things, that certain parts of the market are priced for perfection. And if you better meet that bar, or you're going to have a pullback of, like you saw, 8-10% from Netflix and Tesla, respectively.
Yeah, no, and I completely agree with Shan. I think a lot of these names have been priced for perfection, as we already know how much they've already moved year to date. You look at Microsoft, Amazon, Apple, it doesn't matter what name of the Magnificent Seven has really grown. I think actually it doesn't matter as much to the market. I think the narrative going into this quarter is really the broadening out, other sectors, whether it's healthcare, materials, transports. Obviously, transport's really doing well so far this year. So I think I'm focused more on names like Boeing, ExxonMobil, CV, Chevron, right, and other names on the market versus, some of the Megacaps names, because I do think, if there are misses, we could see some of the price action like we saw in Tesla and Netflix, unfortunately.
Yeah, Joe, I mean, the Megacaps, by the way, Apple doesn't report next week. Let's just make sure everybody realizes that. You do have Alphabet, Microsoft, and Meta. But for those 3 companies alone, I mean, you talk about where the multiples have gone. Let's take Microsoft, for example, was 23 times at the beginning of the year. Now it's 32. Alphabet was 17. Now it's 21. Meta was 15. Now it's 23. The Alphabet and Meta multiples are not so ridiculously outsized relative to where the S&P multiple itself is. But nonetheless, if you expand that much, you better back it up. You better back it up with good earnings.
Okay, so in the instance of each one of those 3 stocks, if you don't, guess what happens? You become Netflix or you become Tesla. And you just experience the extended technicals right now get corrected. And I'm not afraid of that. Right. I'm not afraid of that at all. Why? Because I think what we've learned this week is there's resiliency in the market. Over the last 5 days, what's the leading sector performance? Energy, healthcare, financials. So the resiliency is there for the overall market. And when you think about mega caps, whether it's consumer discretionary and technology, if we want to work off some of the extreme overbought conditions on fundamentals that are not, overwhelmingly beyond expectations, I'm completely fine with that. I think that's healthy. I think it's good.
Do you think that these mega cap names that are reporting next week are going to meet the moment? It is sort of a moment of truth. I mean, you can't have stocks go up as much as they have. These are among the best performing stocks by a group. Microsoft's up 44% year to date. Alphabet's 35. Meta's 151. We all know what's happened there. It's no Nvidia next week and it's no Apple, but nonetheless, those are pretty good performances.
Those are pretty good performances.
Do you think they're going to meet the moment or not?
You know, Scott, listen. Listen.
I'm going to ask you 10 more times. So I'll do it as many times as I have to.
Let's be completely candid, okay?
Many times I have to.
You could have 100 people come on this show and give their view of whether they think it's going to beat or not. The reality is no one knows what's going to happen.
No one knows if we're going to get hit by buses when we leave the stock exchange.
No, we're talking about earnings.